So today I'm really honored to have two very, very special guests with me here. We have Gogo Bethke, who is a leader in real estate and in the industry, and also my business partner at EXP. So couldn't be more honored to have her here. Gogo speaks three languages and came to this country with $200 in her pocket. And she's built an empire over the years, teaching agents all kinds of things, all the things she's learned, and she's just incredible. We also have Joe Vegas, who's the president of the Texana Bank REMLO division. And that I just learned that Joe's also a law enforcement officer in California. So thank you for your service, Joe. That is incredible. I didn't know that till today. So
Yeah, thank you.
so excited to have you both here. And you have both been really incredible at changing the landscape of real estate and then the opportunities that are available to real estate agents. And so thank you for doing this. And just so we can get started, Gogo, do you want to just a little bit about you and what you
Sure.
do? What you do in a nutshell. I know that could be a whole
Yeah,
other
we'll
hour
go straight to
podcast.
the yeah, exactly. We'll go straight to the point. I came to the US when I was 21. I did all kinds of random jobs. As you said, I speak three languages. I'm Hungarian by nationality, but I was born in Romania, so I also had to learn Romanian. And English is my third language. I don't have any college education. I like to joke and say I don't even have kindergarten education in the United States, right? Because I was 21 by the time I came to the US. I did a bunch of random jobs, and then not until 29 of age, I got the idea of becoming a real estate agent. It wasn't even my idea, it was my neighbor's idea. I was active on Facebook because it was the only way for me to stay in touch with the life that I left behind, right? The cousins, the best friends, all of that, the school friends. And so I was active on Facebook, and she thought I would make a great realtor because of that. And what a great idea. I was a stay-at-home mom at the time watching HGTV. Let's do it. I made it look really simple, right? In my first year, I made a whooping $16,000. I was like, oh, this is not as easy as I thought. I paid more in gas and fees. And so then I became a studier of the craft, right? I believe that the quickest way to success is copying the ones who are already doing it.
Yeah.
So I joke and say I'm the best copycat in the world. And then slowly I became a top producing agent. Then I ended up building a team. Then I ended up building some digital courses that teaching other agents how to do it. Because as soon as I became good at these certain things, agents would ask me, how do you do that? Can you help me? Can you teach it to me? And so I built a couple boot camps for which I got 3 Comma Club awards for. So I kind of like the knowledge side, the technology side. Technology comes easy to me. And then through the years, I am a huge, I came for the American dream, right? So I want everyone to have possibly the best life they can in this country. And for that, you should have multiple sources of income and you should have some passive sources of income. And that's pretty much this would be the segment in introducing Joe and how the REMLO program came about.
Mhm.
And I guess Joe, take it from here.
Yeah, Joe, can
Yeah.
you just tell me a little bit about Texana Bank and the REMLO program and how agents can add this resource?
Yeah, you bet. And thanks again for having me, Julie. Appreciate you doing that. One of the things that and I'll touch on this really quick. One of the things Gogo didn't touch on, and it's the reason I think her and I hit it off so well, is she is a compliance nerd. She just loves compliance. And early in this program, putting this together, that was one of mine and our key focuses. And you couldn't get Gogo off of that subject, right? So that was one of
As
the
you
things
can
that
see,
kind of
orange
resonated.
is not my favorite
Yeah,
color, right? I like it
that's
on
her
this
favorite too.
side. Yeah, not for a commission would I, do something that's even borderline illegal.
Yeah, I could definitely testify to that. It was again, it's what kind of gravitated us together. So this has been probably a 2 year or so process, and dual capacity has been an option for quite some time. I've been in lending 25 years, 10 of those years in dual capacity, but it hasn't been in this landscape. About 2 years ago-ish, the government made a pretty significant rule that basically allows the dual capacity for certain participants, in this case, agents, and they basically redefined it as no longer a conflict of interest. So we put the program together with a few key points. Some of those key points were a program that meshes with the world of an agent, right? I think a lot of companies out there have struggled with that, but we've put a program together, a lot of which Gogo had a hand in guiding us in understanding that that chaotic world that agents live in. And we really built a program around it. So for agents that are interested, it really is simple. They would go to remloprogram.com. Just kind of getting right into, they go to remloprogram.com. There's some information about the program there that they can dive into. There are some qualifications for the program. Um, 6 units or 1.8 million on the buy side in the last 12 months. That's with a dotted line. What I mean by that is it was not an easy year last year for real estate. It was not an easy year last year for lending, right? We were kind of in this together. Um, we want good agents, right? So if you had an off year, if you're in a team structure and maybe it's not reflecting in the numbers, we want to know that. So when you go on to remloprogram.com, you'll fill out the form, and one thing is you also, who referred you to the program, but you'll be able to put your information in or some comments. If you don't qualify for whatever reason, not a hard line. We'd like to know. We'd like to get to know you. And I know we're going to talk about a little bit more about the process, the compensation, Julie, but
Mm-hmm.
remloprogram.com is where they would begin their journey.
And let's explain super quick what is that. So REMLO stands
Mhm.
for Real Estate Mortgage Loan Originator or Loan Officer, however you like to call that, right? Pretty much what it comes down to is in the past, real estate agents were allowed to be a loan officer, but never in the past, never to work on the same file. So if you were the agent on the file, you were not allowed to be the loan officer on the file in the past. Okay. That changed December of 23.
22. Yep.
2022,
Yep.
December of 22. So it took us a hot minute, right, to be able to build it out legally. And then I guess I give you the floor here, Joe, because you know all the nuances and the details, what it actually requires
Mhm.
legally for this one to work.
Yeah, yeah, you bet. So at the end of 22, HUD made a change to that. For simple terms, a conflict of interest rule basically said certain participants in the transaction were no longer deemed a conflict of interest. And in our case, obviously an agent. So anyone that doesn't have or doesn't partake in the approval of the loan on the lending side can now partake in multiple streams of income on a single transaction. So an agent still can't be an underwriter. An agent can't be an appraiser. I don't know any that want to, but they could absolutely be a mortgage loan originator. And there's some caveats to that. And Gogo was, touching on it. Is what we call the actual services test. So it can very well still violate RESPA. I always throw that out there, right? It can very well still violate RESPA. We put a lot of time and energy, as Gogo mentioned, into the compliance of the program and around shaping what actual services mean. And that might seem to an agent daunting, like, first thing I always say is, we know you have a full-time job. We know you have a full-time job. This is a part-time W-2 position that should bolt on to your business. And when I say the actual services, many agents are very surprised to learn it resembles really what they're already doing today. I'll give you a really good example of that. There's a two-pronged test that an MLO typically needs to make, and that qualifies them for origination practices, and it's delivering the method to apply, and then the negotiation of terms. It's a deep, deep well. I won't bore anybody with how deep that well goes, but that's the overarching definition. Provide the way for them to apply, and then the negotiation. Every agent on planet Earth has had the client sit in front of them say, "I love the home, but I don't have any money down." Or there are 100% financing programs out there. As soon as the agent says yes, that's actually licensed and origination activity on our end, believe it or not. So just as an example, and then providing the method, every agent has their own apply now link. So every agent will be the actual MLO on the deal. And we'll be working with a dedicated loan partner. So every agent has a dedicated loan partner on every single transaction, Julie. You don't have to get into the program and be an expert. We certainly recognize the learning curve. So a dedicated loan partner and meeting both of those, kind of what we call the litmus test for compliance.
Which is, I mean, I think so. Myself personally, Gogo was the first one who told me about this, and I think it was two or three times, and I said, no, no, it's too much, it's too much. And then she said, don't say no until you have heard this out and see if it works. So I said, okay. So then I listened to it, and I thought, sure, I could do that. So in December of 24, I got licensed and joined Texana Bank, and I have been doing this as a service and an arm of my business. And it is not a lot of heavy lifting. It is just more of the same of what you're already doing, but it's also an added value to your clients. So I don't think agents understand, and I think a lot of people do shut things down without knowing. So I think it's important to educate them, and this is certainly a way to do that. Joe, what would the earning potential be for agents if they do add this as a tool in their toolbox for their clients? And especially with the buyer agent contracts now that have to be signed, this is another way that people can, validate why they're
Mhm.
paying the extra, cost to hire them as agents.
Yeah, you bet. And one thing that we insist on with the REMLO program is that in terms of the totality of the compensation on the lending side, it doesn't exceed that of what one MLO would make on a non-REMLO deal. Because that's another question I get all the time is, does this cost more? I don't feel right, bringing my clients into this if they have to pay more to be a part of REMLO. We insist that it is at or actually lower than what a non-REMLO deal would be. So I always like to, lead with that because compliance again is our key. And if you haven't noticed by now, I'm the dry compliance, and Gogo usually jumps on and she brings the life too. So forgive me for being right to the point. Gogo usually balances it out. But the
Yeah, so
compliance
it's
of it is
pretty
the
much on the agent side of, right? Like, number one, my favorite word with this program is now you are a full service agent.
full
Right.
service agent.
So
Yep.
you can tell your client, I'm a full service agent. Not only then I can
Yep.
help you with your actual purchase, but now I can help you guiding you through what is it going to take to get you finance? What are your options in financing, right? Like down payment or no down payment or closing costs and all of those things. And you're more knowledgeable today than you were. I remember when I got licensed in real estate, like they don't teach you anything about title, they don't teach you anything about mortgage, but our clients start asking those questions on a daily basis. So now you become a full service agent and you're actually more knowledgeable, and you can take a transaction from start to finish much faster because you have a dashboard. You can log in, you can see if there was an employment verification, you can see if the appraisal was ordered, you can see all of those things in the back end. You're more involved in the same process and you can guide them through it faster to get to the closing table, because in the end of the day, that's all what we want. Everybody wants the biggest house for the least amount of money the quickest possible way, right? and
Yep.
and so you get to do that.
And
Yep.
then I
And
would add too that it is very cohesive in the way that you're communicating with your loan partner. So there's things that
yeah,
you may not
good point.
know because this is not your full-time main job. And so when you ask a question, it's just a text and you get that answer for your client. And so it's seamless in my experience. It's been wonderful.
Yeah,
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 we
because
try to create that. Yeah. Oh, go ahead, go. Yep.
yeah, that side changes. The mortgage side changes just as fast as the real
Mhm.
estate side, right? And us, we have to know both sides. And it's almost impossible to stay on top of everything. And by having a loan officer that's assigned to you, that's their full-time job, right? Like they know they can be there for you and guide you and make sure there's no oops in the middle.
Yep.
Mhm.
Yeah. And to that point, there's a lot of agents that are building teams, right? Like full service teams. So any agent that had apprehension of, I don't know anything about mortgages, that's the reason that you have an experienced, dedicated loan partner there. On average, there's 10 years plus of experience for the individuals we're putting in that position. And if you're an agent, look around, you're building a team. Maybe you have that one person that is the loan expert. This person is the title expert, right? If you're looking to build truly a team, don't you wouldn't have to worry about I have to be a loan expert. The way, and Julie, you can probably attest to this, the way that we kind of create that environment is the REMLO and the loan partner work very closely together, where you're never pinned in a corner with the consumer and they're asking you to look at their K1 income or anything like that, right? You
No,
always have your loan partner there. And a lot of clients recognize that you really are the face of the transaction, and you have key people on your team that do certain things, and clients are asking for this. We were taking the time to survey clients after the REMLO deal, and it's funny. I'm getting responses like it's about time. Like this is what we've always wanted. And being in lending for 25 years, it's like this aha moment because it's like a kind of a running joke in lending. It's like the agent they close the purchase. 6 months later, the client's looking for a refinance. They have Google, they have all these. Why do they go to the agent for the refinance, for the referral? And it was just, it's a clue that that's where the rapport is, the credibility. All we simply did when they redefined that law is we just simply brought what the consumer has been asking for many, many years. And then I wanted to close out the question. You were talking about the compensation. Specifically, it's a 0.5% or 50 basis points in lending language, or 60 if you do over 1 million in any given month, and it's prorated. So we'll go back and in totality on the whole month. Remlos on average are making about 2,200 or so in additional
Per
vertical of
deal.
income per month per deal. And a good metric to kind of quantify this is it's about $6,000 per 1 million in transactions for the agent. Because keep in mind, a lot of this is just production the agent's already doing, right? You're not out finding Remlo deals. You have the purchase on 123 Main Street, and now you're able to offer that client the services on the real estate and the lending. So it's on transactions they're already doing.
And you are not giving that referral away. So you are keeping that in your
Yes.
pocket for your family. And so in
Yes.
my umpteen years of real estate, I couldn't even tell you how much I gave away in referrals. And we didn't get anything back for that. And so now you're getting compensated and you are also keeping a hand in it with your clients instead of passing them off to somebody that they don't know, but you recommended. And so it has been a really nice, connection to keep and to have.
I
So,
want to add on to that. There were multiple things and it didn't occur to us while we were building it. So one of them is the multiple state, right? So in real estate, let's say you licensed in Michigan, right? So you can only do transactions buy side in Michigan because that's where you're licensed. Now, if you have a referral to Kentucky, you'll have to then send it to an agent who's licensed in Kentucky. But when you are a REMLO, you can send the buy side transaction to Kentucky, but keep the loan.
mhm.
Right? So now this is a whole other source of income. So we didn't think of that. Oh, no, well, I didn't think of that. I don't know about you, Joe. The other thing that I didn't think of was when the market changes, right? For like refis, for example. Like think of how many times, just as Joe said, you have sold the property to someone, market goes up, 2 years later, it's like, oh my gosh, Gogo, we have $180,000 in equity. Who was the lender that we closed with? Like, we want to refinance. We got on a HELOC and take it out and go buy an income property, right?
Mhm.
And so every time we would send them back. That was another way for us to make money that we were not able to do in the past. It's our client. It's our
Mhm.
relationship that we nurture for years and years. They come back to us, right? So it's another source of income for us that is might not be tied to a transaction necessarily that you're going to be involved, but now you can still collect on the HELOCs or the refis or all of those.
And it helps
Yeah.
to navigate the changing market. So it's still, you're still able to earn income, even if the sales
Mhm.
market is changing and not as good maybe at certain times. So
And I
it's
thought of another
incredible.
scenario. I want to share this because there's so many ways that we can make income. So for example, you let's say that you live and work in an area where people invest, right? Let's say they come out of state. Let's say they get a HELOC out of state on their primary residence, right? They're using those funds to use it as down payment on the investment property by the beach. Well, if you were an agent, you could only get paid on that investment property on the beach. But now you can get paid on the HELOC out of state. You can get paid on the investment property on the beach because more than likely they're still going to have a mortgage, right? And you're going to get paid on the property and the real estate transaction itself. So it just gives the agent so much more opportunity to work with since they're already involved with that one client anyway, and it's our sourced lead, right? And now you get to work both sides and be a full service agent.
It's huge.
In
And
all
go
50 states.
Yeah,
in
well,
all 50 states.
yes, and
Yeah.
also with a few caveats, some of the states don't like to play by the other states' rules. Let's put it that
Yeah.
way.
Yeah, and we call those prohibited states. And now I'll show you some of the opportunity that still lie in some of those prohibited states. But that is probably our secret sauce. So Texana Bank is a federal charter, like fancy jargon, right? I'll explain what federal charter means. Federal charter means we have a federal provision that is basically in simple language a blanket license for agents when they come in the REMLO program to get their MLO access. If you are an agent and you're looking to become an MLO or become in dual capacity and you go to a non-chartered bank, a lender, I won't start throwing names out there. I don't want people to hate me, but you would have to go do your 20 hours of pre-license work on your own. You pay for your own license typically. Hopefully you pass a safe exam and then you are licensed in just that state. If you want to become a national dual capacity agent, then you would have to do that 49 other times with
Incredible.
REMLO specifically, and I believe we're one of on one hand. I won't even talk about the competition because it's almost non-competition out there. But an agent comes in if they qualify for the program. We do all of the training, everything in-house, all internal. There's no safe exam, no tests externally, and we actually pay for all the licensing. So there's obviously a barrier of entry to come in, but when you come in, we absolutely pour into you, and what we call that is NMLSR. Registered. So day one, Julian, and you know this, you day one, once you qualify, you come into the program, you are eligible to originate in Florida through Alaska if you wanted to. And Gogo touched on those opportunities. You talk about the
Mhm.
relocations, I mean, for everybody out there listening right now, their heads probably exploding with what that means with client retention, and we're going to talk about Refi Pro in just a bit. But I wanted to highlight how critical that is in terms of separating yourself from the competition. And with this is a kind of a ballpark number, right? It's hard to get this number exact, but my best guess is there's less than 1,000 agents in the country that can say I'm an agent and I'm also a national lender. So of the, what is it, millions? I think a couple million
Yeah.
agents in the country,
Yeah,
less than 1,000, and that's by design. We have more agents that are honestly that are applying for the program than we brought in, but that's a little bit by design. So the agents that do come in and qualify, you can look to your left and look to your right and say I'm a REMLO. That's I think that's a triple digit number right now. So really, really cool. You talk about adding value, that full service agent, adding value and separating yourself from the masses. It's a really cool way to do that.
absolutely. I just want to touch on the training really quickly too. I
Yep.
did this over Christmas time. It was, when everybody's busy and life is
Yeah.
crazy. And so I was still able to do it then at home. All of it
Yep.
was online and, I met all the requirements and it was no huge undertaking or real big stress, we got it done and it was very easy to do. So um,
Yeah.
no one
It's
should be
about four
afraid of that.
hours. Yeah, it's about 4 hours if you're looking at it in terms of like CE. So if the minimum on the real estate side is 6, it's about 4 hours. It's all annual. We break it up quarterly, and then you can do it all self-paced, kind of to your point, Julie. It's all remote, online,
I
and then
always get
that's yeah.
reminders of,
Yes.
update and
Yep.
all these things. So it's great. It's
Yep.
been really great.
That's
You
awesome.
did mention the Refi Pro program, which I'm interested to hear more about. I am not
Yes.
fully up to speed on that one. So I think I'd love to hear more about that.
Yeah, this is very exciting. This is REMLO in essence. This is the power of REMLO, like just personified, if you will. So home sales right now are doing okay. It's I would say year over year, it's probably flat to be fair. Maybe it's up 1% or two. Refinances are up approaching 20%. Now that is language for most agents where they're like, okay, so what? Where are we going to lunch? Why do I care about refinances? But for a REMLO, that is something totally different, right? Because now we're going into Q4 and it's like home sales are slowing down. Q4, winter time is typically when an agent slows down, not for a REMLO. What about the clients that need to refinance to take cash out to put a new roof on before it starts raining, for Christmas, whatever. These are the additional verticals of income that we were talking about for REMLOs that specifically resonate. And what we basically do is you have a loan partner, dedicated loan partner. Your loan partner is going to work your book of business. We're going to go back over the last maybe 2 or 3 years and look at your existing pipeline, your existing book of business. Your loan partner will go in there and basically do a preliminary scan of all of the clients that we believe that we can refinance. These are VA deals that are a 0.5% or better, which are we call streamline refis. No appraisal, no income. They just go right in. We take the last 2 to 3 years preliminary, kind of qualify them, go back to you, get the contact information, and then your loan partner would do the outreach, engage interest, bring them back to you, and then together you guys originate that deal. You talk about just pulling deals out of the sky, right? These are so from a monetary perspective, we had one agent come in, and I want to say he did it was 16 clients, right? And it's maybe 8, 9 million over the last few years. That's a $50,000 commission check for him in 1 month. And that's great. And me being the nerdy guy, the compliance guy, what I love about that that is actually what the programs are designed for. The realtor, the agents going back and adding value to their book of business. When we call that client and say, Julie's thinking about you, we're her loan partner, she's thinking about you, she wanted to make sure that your rate, your payment, she's the lender, like their heads are exploding. But it's adding the true value of dual capacity, and then obviously there's a monetary benefit to it.
And you're sitting
um
on your own gold mine, right? Like these are
Absolutely.
relationships that you have built and nurtured through the years, and you're
Yep.
truly helping your clients because they don't know. Let's say the rates dropped 1.5%, 2%. That's thousands and thousands and thousands of dollars for them every single year that now you can save for them.
And
Yep.
and Joe, I am correct in saying this, but that is automated because I'm getting clients who said, "Oh, I love this. I love that you're reaching out to me with this possibility," or, it's
Yep.
nothing that I am generating myself. It's
You're
something
not
that
sending out marketing fly. This is Jan and Mike Smith that you helped put into 123 Main Street, right? And we're going back and we represent, because it is accurate. We represent that we are your loan team, because we are, right? This is not just any lender from down the street calling them. This is their realtor that put them in that home, that's now concerned, soup to nuts, that they were in the house at the best price, at the best rate, and 6 months later they're still at the best rate and payment,
Mhm.
right? This is that full service agent that we're talking about. And you can get me, I will not stop talking about this, so you have to kind of shut me up,
No,
Julia.
but I
uh,
wanted to just point that
but I think it's the
point out
future.
it's
Yeah.
no
Yep.
extra work for
No,
the
not
REMLO
not not
agent.
not
It
at
is
all.
automated. It's happening on the back end. And so
It
I
is.
think anybody fearful of taking on more than they think they can handle, there's so much that is already done for them being in partnership with Texana.
With your loan partner. Yeah. Yeah. And
Mhm.
that's such a good point, because I won't talk about the competition, but if you're going into this, a lot of the other companies, you don't have a dedicated loan partner. So be prepared to do the full application. I mean, everything is, that was one thing we wanted to make sure, is that we know you got a full-time job. We wanted to make sure that you weren't in the position where there was any deficiencies or anything like that perceived by the consumer, and that you had all the support, compliance, the whole nine there. And one last thing on Refi Pro, one thing I always say is we're up 20% year over year in refinances. Someone is going to refinance those clients. That's the only thing I can probably guarantee is someone is going to. And when, again, I try not to say other lenders' names, but when they refinance and Mr. and Mrs. Smith say, I was actually thinking about buying a second home or an investment property, I will bet you my lunch money that that lender's not going to call Julie Johnson and say, "Hey, remember your old client? They want to buy a home." They're not going to do that, right? They're going to push that deal to their MSA or something like that. So
Mhm.
this is as much compensation as it is service, as it is pipeline protection for the
As
agent
it
too.
is
Yeah.
collaboration together,
Yeah.
and that is huge. So
You bet.
And
that's fantastic.
since you're talking about collaboration, I want to bring in the EXP portion to this. So, Julie, you have a downline and organization. Not every agent in your downline and organization is going to qualify for the REMLO program, right? Until they do, you can become their lender of choice, right?
Hmm.
Help them with those transactions, help them grow up in the real estate industry. And then when they qualify, they can become REMLO on their own. But in the
Yes, we are
meantime,
doing that. They are
you are.
referring me to
That's
their
awesome.
clients. Yes.
Yeah. So
Hmm.
in the
Yeah.
meantime, they know they're in great hands because they already chose to partner with you. They already trust you in the industry,
Hmm.
right? So in the meantime, you can become their lender and then help them grow up in the industry. When they qualify, they become their own REMLO.
Hmm. Yeah, it's a
Yeah.
win-win. Definitely a win-win.
Yeah.
So just one more time, unless there's anything else you want to add, I just wanted one more time how they can get started and find you and get a little more information. I know Gogo has a page on her site. I have one on mine, but I know you also have one also.
Yeah, you bet. So I'll first throw this out. Any agents that just want a little bit more information, maybe this is interesting, they just want to dive in a little bit, I'd love to make myself available. So joe.vegas@texanabank.com. Email me, we'll schedule some time and we can dive in. We can spend all the time that they need to get into the nuances. Every agent is their own business, right? So this could impact agents on different levels. Love to go through that with each one of them as needed. For the agents that are ready, again, remloprogram.com. Simple as that. They'll go there. There's some more information there. There's a commercial that they can watch, a little bit more information. But when they're ready, remloprogram.com, there's a link at the bottom that will begin their journey. As soon as they click that link, there's a Remlo support team. So that's another thing. We have the full mechanics built behind this program. It's not a hybrid program that we're doing. It's not something we're dabbling in. We actually have a full-on division to support agents, which includes a REMLO support team. So as soon as they click that link, we get notified of it, and you will have somebody from the REMLO team reach out, and they'll walk you through that entire process. It takes with an agent that's engaged, from the moment they click that link, maybe a week and a half. Week and a half. So if you're an agent, imagine today, about a week and a half, less than 2 weeks from now, you'd be a national lender in all 50 states.
And I want
Which
to
is
mention that through the application process, when you're joining, they're going to ask you who referred you. So if you're listening to Julie's podcast, please put Julie Johnson down as your sponsor, and just give the credit where the credit is due for the person. We have not mentioned that you can actually grow a team within the REMLO program. Do you
Oh
want to
yeah.
mention that?
Yeah, that's actually, and we probably have the best example of that with Julie. You do very well with this, Julie. You spreading the word, and there's no responsibilities. I'll say there's responsibilities from the loan aspect with your loan partner. When you're just growing a team and promoting the program, you can do exactly that. So you come in your REMLO, and they don't have to be a part of your brokerage as well. You just simply say, "Hey, I'm loving this program. I'm earning another 3 or 4 grand a month. How do I become a part of that?" Go to remloprogram.com, tell them Joe Vegas sent you, not literally if I was the agent, tell them agents say, put
Julie
their name in
Johnson in
there.
this case,
Yeah,
yeah.
Julie Johnson. And then that agent comes in, they qualify. As they produce, you get a direct deposit every 2 weeks on that production. And it's 5 basis points or 0.05%. In dollar language, for every 500,000, it's 200 or 300 bucks. And it just drops right into your bank account. You're like, what the heck is this? It's like, oh, that's so and so. They signed up. So really, really cool. It's an easy way, another additional vertical of income.
I want to mention though, because a lot of our agents are in the EXP world. At EXP, we have 7 generations. In the mortgage world, you can only have one generation
Correct. Yep.
legally. So you can
Yep.
bring as many REMLOs to the REMLO program. So you
Mhm.
can change as many agents live as they are interested. So every time you bring an agent and they want to become a REMLO, and Julie, let's say they name you as their sponsor, right? You can bring as many REMLOs to the program as you wish in one line. Make
Yep.
sense? And then every time they close a transaction, you get paid that 0.5%, sorry, 0.05% override, right? And that's another way of source of income, since we talked about, active income, passive income, and recurring income. I'm all about generating income
and building
and
your
changing
business.
changing
Yeah.
lives.
Changing lives, helping people. So thank you
Absolutely.
guys. Thank you so
Yeah,
much
you
for
bet.
joining me. This was amazing. And
Enjoyed
I
it.
will be seeing you again soon.
You bet.
Sounds
Thanks,
good.
Julie.
Thank you so much for having
Take
me.
care. Thanks,
Thank
guys.
you. Bye,
Bye.
everyone.